Hello, everyone. Welcome. My name is Allie Johnson, and I will be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Blake Quesenberry. He's a Capital Pathways business advisor and CPA, and he'll introduce himself and take us through a presentation on small business tax fundamentals. As we go along, please feel free to ask questions using the Q&A function. We'll respond to them at the end of our session. And for any questions that we can't get to in today's webinar, please do reach out to us over email. We'll happily address your question or address them through our no-cost one-on-one services or connect you with resources that can help. We'll share a recording of this webinar and slides as part of a follow-up email. So what is the Capital Pathways program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We'll start with the program overview, then go through the program eligibility, and finish up with an outline of the services we offer. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses build the systems and habits needed to become capital ready. This matters because businesses that are less prepared often self-select out or fail loan applications, and these early failures correlate to a lack of adequate capital. Additionally, higher cost alternatives don't build long-term capacity, and ultimately, only half of the loan amounts that are requested actually reach small businesses. So to put things in perspective, about 25% of small businesses need access to finance for growth or preserving cash flow. However, only 20 to 30% of those who apply get their loans approved. To help address this challenge, our program, Capital Pathways, creates a path to financial and legal readiness. We offer an immersive, hands-on group experience paired with one-on-one individualized support. Who's eligible, you may ask? Very small businesses and nonprofits at any stage who face challenges accessing traditional financing. The services we provide include a guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and credit building advising. As I noted, we start our process with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our program or other resources that can help. Under our legal structure validation support, our in-house advisors can help you through basic questions, and we partner with a law firm to answer some more complex questions on topics such as business registration, trademarks, and contract and agreement reviews. We also offer financial webinars on financial basic topics such as this one, as well as financial statement preparation and QuickBooks training. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, and loan readiness and lender preparation. These loan readiness services also include both webinars and one-on-one individualized support. And our webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, SBA loan options, and sample application analyses. We also have a partnership with a lender that provides one-on-one support to those looking for capital. Finally, our credit building advisor will help you review and interpret your credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for the best financing options and terms possible. So if you're interested in getting started with the Capital Pathways program, you can reach out to us through our website, which is virginiasbdc.org/programs/capital pathways. You can also access that through the QR code on the screen, or you can contact me directly at capitalpathways@virginiasbdc.org. I'll go ahead and share my email and our website link in the chat so everyone has it. Shifting over to introductions, As I mentioned before, my name is Allie Johnson. I'm today's moderator, and I serve as the Program and Intake Coordinator for the Capital Pathways program. I have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. Our session today will consist of a 60-minute presentation. So again, please feel free to ask questions throughout using the Q&A function. We'll respond to them after the presentation. Any questions that we don't get to in today's webinar, we're happy to address either via email or through our no-cost one-on-one services, or we can connect you with resources that can help. I will share a recording of this webinar and the slides in a follow-up email, so please do keep an eye out for those. And now, with all of that done, I'd like to pass things over to Blake to introduce himself, tell us a bit about his background, and start the presentation.
All righty. Thank you, Allie. Get the screen shared here. Ecstatic that so many people wanted to take their lunch break today to talk about taxes. So we'll try to break this down for you guys. I know that as a business owner myself that this stuff can be fairly daunting. It feels like there are a million things on the checklist when it comes to taxes and things like that. So what we want to do with this here with small business tax fundamentals is start to develop a compliance checklist for you guys, so that this doesn't seem quite as daunting as you get to different points throughout the year and start to approach due dates and these things are knocking at the door. So we want to kind of introduce you to some of this stuff. You may be familiar with a lot of it, but either way, we're going to go through it. We'll try to get through all the fun stuff pretty quick so that we can open up to questions here at the end. So again, this is small business tax fundamentals. Like I said, pretty fun list of stuff here to cover. Like Ali said, my name's Blake. I'm a CPA and based down here in Bristol, Virginia, right next to Tennessee. So we're in the Southwest Virginia region. Been doing this for a couple of years on my own and predominantly work with business owners like you. We have a tax division. We do a lot of taxes, but a lot of my time is spent working with business owners like you guys to try to develop an understanding of compliance in different industries and also try to get a handle on cash flow and things like that. But today we'll try to keep it to taxes, compliance, filings. We'll start with local taxes and kind of work our way out. Local taxes like business, personal property, business licenses, meals tax, state taxes, sales and use tax, state withholdings, state unemployment, industry specific state tax obligations. There are a lot of those. We're going to talk about EIN numbers a little bit, W-2 versus 1099 employment status and related taxes. And we'll talk about payroll tax and federal unemployment tax as well. So again, goal here is to start to develop a checklist unique to your location and your industry. But we can't do any of these filings until we have good information. So I'll try to remind you a few times throughout this talk here to make sure that your business and personal bank accounts are separate and that you have information systems in place to track your numbers, track the performance of your business, because a lot of times that is what is going to flow through into these all these tax filings. Okay. So, like I said, keep those bank accounts separate, develop good habits there, use a dedicated accounting software if you can. If nothing else, if you're just starting out and your budget doesn't like the idea of QuickBooks, use an Excel spreadsheet, find a template that you can do a simple bank reconciliation with, and that'll help you um, not scramble as much when tax season hits and when you have to put together different information for these filings. And so my recommendation, if you're a new business owner, is to, like I said, the stuff is fairly daunting at first. So start locally because that's going to be the easiest way for you to um, talk to a human being and maybe develop a contact that you can work with to make sure that you're in compliance with your locality as far as running your business. Okay. And then we'll work our way out, talk to the state. Um, you might try to talk to the IRS. I don't know if you'll be successful, but you can usually get a hold of somebody if you call your locality, your city hall, county office, and also when you call the state. They're great to work with. So, what do local taxes look like? Um, and this is going to be your towns, cities, and counties. And this is going to vary a lot. In the state of Virginia, federally, those are pretty standardized processes, right? But each locality is going to have different laws as far as business licensure, the way that they tax businesses, whether you're subject to meals tax, how does your business tangible personal property look, right? So we'll talk a little bit about all of these specifically, okay? But that's kind of an overview of what you're going to look like when you call your city hall or your county office to talk about opening a business. Meals tax applies to restaurants, takeout, drive-through, things like that. Um, the simplest way to look at that is that anything prepared to serve in an area or take away is subject to meals tax. It doesn't apply to things like grocery stores or gas stations or boutique stores that package food and sell it for you put it in a bag and take it away, So that's the quick. There's a little bit of gray area, but pretty simple to determine based on the nature of your business. If you run a restaurant, you run a food truck, anything like that, you are going to be subject to meals tax. If you run a grocery store or a business that functions in a similar manner to a grocery store, then you're not going to be subject to meals tax. And this is just a little overview of some rates that you may look at. I just pulled a handful. Um, Generally 5 to 7%, creeps up a little bit more when you get into the larger cities. Usually there are some exceptions to that. But a little note here, meals tax isn't a scary filing if you have a good point of sale system. And I would imagine that most of you, I would say that some of you run restaurants or some food service. Um, and you've probably already learned that a point of sale system such as Square or something like that is pretty important. And so if you input the right information into your point of sale system, that should go ahead and charge your customers that accurate amount. And then when it comes to filing your meals tax, you should just be able to pull that number um, right out of your point of sale system and send it on to your locality. Okay. Some industry specific local taxes here, and also a little grid of which which jurisdictions may have you subject to these. So that top one there, the BPOL, that's business license. You're pretty much going to have a business license in any locality, whether you're in a city, a county, or a town. Um, you're gonna have to have a business license. So contact your locality, and they will be able to route you to the correct avenue to get that figured out. Okay. Tangible personal property. So that they're going to make you work on that one. So if you run a business that has an office or something like that, you're going to receive something in the mail normally that gives you a grid to fill out that says, "Hey, this is what we have in this office that has value." And then they're going to apply a tax rate to the total value based on the tangible personal property that's used within the course of your business. Okay. Real estate tax. If you own real estate, you're going to be taxed there on the city or county level. If you live in a town, that's usually going to be passed through to the county. Okay. Meals tax, all three are subject to that. Lodging tax, if you run a boutique hotel, if you run an Airbnb or something like that, you need to check with your locality and see if you're subject to lodging tax. Okay. There's a tax on cigarettes. So if you run a small store and you sell tobacco products, you need to check locally to see if there are any taxes related to that. There are taxes related to that on the state level, which we'll look at a little bit more later. And there's also a machinery and tools tax. So check with your locality and see if they tax machinery and tools. So we'll jump over to state tax here. And I think um, the first line of business for you, if you're not already set up here, um, you need to get this self-service stuff set up because this is going to be the hub for all of your state tax filings, including your unemployment tax and things like that. So you're going to register your business first, set it up here. And I just wanted to kind of give you guys an overview of what this looks like so that when you get there, maybe you can feel a little bit more confident that you're in the right place. Okay. And just make sure that if you're just setting this up, go ahead and select that registration there on the left. And once you log in, generally the first place you're going to go is the tax side, not the employment commission. Okay. So you're going to get tripped up. I still get tripped up with it by trying to log into to one or the other. Make sure you have your EIN number ready. You're going to need that. So a lot of especially through the Capital Pathways program, a lot of the clients that we work with, one of the first places that we have to take them is here, right? So this is once you get your login set up with the state of Virginia, um, this is where you're going to go to start telling the state, hey, this is the nature of my business. Here are the handful of things that I am specifically going to be subject to. Okay. And a lot of that is sales tax. So you're going to go over here and add a tax type, and then you see all of these tax types here, and most of you won't be subject to most of these. But a lot of folks are subject to the top two there, sales tax and employer withholding. Again, just a little visual overview for you. Sales tax, pretty cut and dry. I mean, if you're selling property, selling any kind of physical, tangible good, that's going to be taxable within the state. So anything sold at retail, pre-written tangible or licensed software and digital products. So if there's something that is um, downloaded onto your computer, this isn't something that's cloud-based, those can actually be subject to sales tax. Okay. Um, Fabrication labor, when you take a product and you transform it, let's just say that you get a piece of lumber and you turn it into a duck or something fun like that, and you give it back to a customer for a fee, that is fabrication labor, and that equates to selling a product even though you weren't, even though you didn't produce the materials. Okay, so anything that is tangibly changed and then given back to a customer, that is subject to sales tax under the state. Um, Installation labor, when grouped with the product sold, if you don't break these out, um, and there's a product that is itemized on your invoice, you're going to want to collect and remit sales tax on that. Okay. So if you want to be able to substantiate that you have labor-based sales, you need to make sure that you split those out. Okay. Use tax, I'll be honest with you, never had to deal with it. I think this is an easy one to slip through the cracks, right? If no sales tax was paid on out-of-state or online purchases, and then they are used in the course of the business, then those are technically subject to use tax. Again, not a lot of experience with use tax, but it's there and it's something that needs to be considered. What is not taxable from a sales tax perspective? Like I said, separately stated installation or repair labor, professional service, kind of like what I do, or if you're in marketing or medical, something like that, professional services, not taxable. Now, a lot of folks in the service industries may start to sell products. Those, of course, are taxable, but the service-based businesses generally not subject to sales tax. And real property improvements. So if you flip houses, generally you are gonna pay like crazy on sales tax when you purchase all those materials. So the state is fairly kind to those folks and doesn't make them collect and pay it again. So real property improvements not subject to sales tax. And again, a little bit of a visual here for you. I hope that's helpful for when you get in there to make sure that you know you're in the right place. So you can see here on the left that this example, um, this would be an example of an individual that had sales in multiple counties or locations. And so generally, if you just have sales in one locality, then you'll just see one of these slivers here, like that Arlington up at the top. Um, but quite a bit of folks out there that have sales in multiple localities. And then once you get it drafted up there, this is going to be about what it looks like. There's no data here, but generally there it's going to tell you how much you owe and things like that. So pretty simple. Once you get in the rhythm of it, doing that, whether it's monthly, quarterly, the state will let you know for sure. State withholding, this one gets as a tax preparer, this one gets pretty colorful. The general rule is that you must withhold income tax of the state where the employee works. So when you have, especially with me where I'm located, we got a lot of folks that commute from Tennessee into Virginia. Um, they have to pay income tax despite living in the state of Tennessee because they perform the work in Virginia. Now, if they work remotely in Tennessee or North Carolina, one of these surrounding states, um, and it's a company based in Virginia, but they don't physically work in Virginia, then they don't have to pay income tax. Okay. So if the employee works in Virginia, withhold state income tax, even if they live in another state. If they work outside of Virginia, you must withhold that state, not Virginia's. Now, if they live in Virginia, of course, it goes without saying, they're subject to state income tax. Remote employees are taxed based on where they physically perform work, and I would strongly recommend if you run a business that has um, employees that work physically in a different state, I would strongly suggest that you properly set that up and make sure that you have the option for that employee to withhold taxes in the correct state, even if you're not normally used to withholding taxes in that state. I would put in the work up front because if it gets to a point to where incorrect withholding, if you withheld Virginia taxes and should have withheld taxes through another state, you're gonna have some work to do to make sure that the employee's taxes are prepared correctly. You might be have to send out a letter that says, "Hey, we confirm that they didn't physically work here." So I would recommend just making sure if you're dealing with multiple states and multiple state withholdings, be very careful with that because it can become very colorful during tax season. Okay. And this is another little visual here. Um, Going back to that same place that we added the sales tax, right below it is where you would add employer withholding taxes to your account there. And depending on volume, probably going to be a monthly filing. All right. And that monthly filing is called the VA5. Now, if let's just say that you had one employee, you withheld taxes for them, you set up this withholding process to pay that employee. Even if they're gone, you have to, once you start, you got to continue doing it until you tell the state, hey, we're not planning on hiring in the near future. They can turn it off. But generally, for a while after getting rid of all employees, you're still going to have to let them know that you had zero withholdings, or you're going to start getting those letters that we all, of course, don't love to see. Okay. State unemployment tax. Again, not something that you generally will have to claims and things like that. Not extremely common, but still something that you got to do that you got to pay into. And to do this, you're going to register with VEC, the Virginia Employment Commission. Okay. And if you are withholding state income taxes and you haven't done this, whenever the state deems that you pay out enough in wages to be subject to unemployment tax, they will send you a letter. So a really cool process there by the state. I recommend I recommend going ahead and registering with the Virginia Employment Commission as soon as you hire an employee. But oftentimes the state will go ahead and tell you, hey, you're not paying out enough uh, to be subject to unemployment tax. So hold the phone for a little while, and then they will let you know. They'll send you a letter when you become liable for state unemployment tax. And you'll get an account number there with the VEC when you register. You're going to want to hang on to that. And again, a little visual here, there to the right. That's like I said, I get tripped up a lot trying to log into one or the other. So just make sure up there at the top you're logging into Virginia Employment Commission as opposed to that tax interface that we were looking at earlier. Um, quick note about this. I've honestly never manually filed a a state unemployment tax form. It's always been automated. Most of the time, if you're running payroll, you've probably got a system in place, and any payroll system worth their salt at this point is going to handle this for you as long as you set it up correctly on the front end. Okay, so the calculations, if you have a good payroll software, I wouldn't worry too much about those calculations. Okay. And just a quick touch on some of those other kind of random industry specific filings that the state might deem you liable for. Communications tax there, that's one that I've worked with a couple of fiber companies. Vending machine tax, pretty common one. But generally, you can once you get into the state website, you'll have an opportunity to look at these and they they're pretty apparent, what industry they're for. So again, give the state a call if you think there might be one of these that you're subject to, and they'll be able to walk you through it pretty easily. This is this is probably, I would say, within this whole slide deck here, this is probably, as someone who works a lot with business owners, with employees, this is probably the biggest point of contention on a day-to-day basis. Just the understanding of a self-employed individual versus a W-2 employee. What kind of labor is eligible for 1099 income? You know, a lot of businesses try to avoid payroll tax. Um, but generally, if somebody doesn't own their own business, the safer bet is usually to run it through W-2. Okay. But there are a lot of gray area there. Want to be very careful with it because if somebody is misclassified as a 1099 worker, um, and whoever uh, comes along and says, "Hey, we're going to take a look at this," and there's a reclassification and it's backdated, there are going to be substantial payroll taxes and substantial penalties and interest if somebody's misclassified. So take this as serious as you can. Make sure that you're not playing in those gray areas with 1099 work versus W-2 work. Okay. And many of you guys probably already know this, but self-employment tax of 15.3%, that is basically interchangeable with the term FICA. If you're self-employed, you have to handle that entire 15.3%. If you're on a W-2 basis, it's split between you and your employer. Okay. And again, this is just a little further information on 1099 work here. So the contractor is responsible for 15.3%, also pays federal and Virginia income tax on net profit. And generally, 1099 employees are expected, if there is a tax liability that is generated from it, if there's enough income to cause a tax liability, they're going to have to start making quarterly estimated payments. Okay. I'm sure many of you as business owners, went through a period of learning about quarterly estimated payments, trying to figure out how much you owed, when you became liable for them. Um, so just a little bit more information there. EIN number. Do you need an employer identification number? Usually, yes. If you have an LLC, any kind of legal setup for your company, if you're not just operating under your name as a true sole proprietor, then yeah, you're going to need an EIN number because if you have an LLC, of course, you have a separate bank account for it, right? And you're not going to be able to have that bank account unless you have an EIN number. So yes, if you have an LLC, go ahead and get that EIN number. Now, if you're a sole proprietor that operates under your name, you can still have employees. Okay. So you will need an EIN number to have employees. So 90% of the time, you're going to need an EIN number at some point. So what that is an identifier, not only to set up your bank account, but when you do start hiring and you start remitting payroll taxes, this is how the IRS begins to connect the dots of, hey, this payment came in. This is the company that we're going to apply it to. Okay. Um, so yeah, you're most likely going to need an EIN number, an employer identification number. Payroll tax. This touches again a little bit on the W-2 versus 1099 thing, but this is just a little bit more of an itemization of the specifics of payroll tax. So when you hear a hear about a business that is trying to determine whether they want to take on W-2 employees, and they say, "Hey, well, the point of contention here is that once we go down this road, we're going to owe 7.5% on gross wages." And that's accurate, right? So a W-2 employee, pretty simple, going to owe a little over 7.5% on total gross wages. So just something there, when you're budgeting, if uh, if you just plug in the salary of one of your employees, then you're not quite getting the entire expense there. So make sure when you're budgeting that you are budgeting in payroll taxes, even from the beginning of starting your business. When you try to determine how much money you're going to be making and how much you can afford to pay to employees, make sure that you're adding in that extra 7.5%. Okay. And of course, that 7.5% is split between Social Security and Medicare. And that is going to result in a required 941 filing every quarter as a business owner. Again, you know, we do manual 941 sometimes whenever something goes wrong with the system, but generally, this is something that if you're running payroll, if you've got a good payroll software, then these are going to be handled for you. Of course, you want to kind of spot check them, right? You can go, if you're in QuickBooks, you can go into the history and look at your filings and make sure that they're done accurately. Um, I would certainly recommend doing that. Federal unemployment tax, kind of same deal here. Again, we don't really do any of these manually. This is all run through our payroll system and the payroll system for our clients. But this is kind of the quick and dirty on how federal unemployment tax work. If you paid more than 1,500 or more in wages in any quarter, or you had one or more employees working any part of a day in 20 plus weeks during the year, you're going to be subject to federal unemployment tax. And that is 6% on the first 7,000 of each employee's wages. So we get a lot of calls from payroll clients saying, hey, we saw our unemployment tax come out and it's lower. That's because it's only 6% on the first 7,000 of each employee's wages. Okay. So over the course of the year, if there aren't any substantial changes to your payroll, you're generally going to see it, kind of taper off toward the end of the year. And just some thresholds here at the bottom related to liability amounts. Deposit quarterly if your liability is greater than $500. Um, if under 500, you can pay when you do your annual 940. Okay. So in summary here, like I said, I think there's no way, of course, that in an hour we can show you how to actually process all these filings. But I think the goal here is just for you as a business owner to start developing your industry specific compliance checklist. Okay. And again, first line of business here, make sure that your information systems are in place so that you can go and get the information needed for this filing. Okay. Just makes it much quicker. Use a dedicated accounting software if possible. Call your locality, talk to a human about what you need to do to get your business up and running from a compliance standpoint, then work your way out. Um, and understand those payroll tax liabilities. That's a pretty serious thing. Okay, if you're hiring employees, please take the time to understand the difference between a W-2 employee and a 1099 contractor, because if things go wrong there, then it can get out of hand pretty quickly. A couple things here. You're going to spend in the state of Virginia, you're going to spend plenty of time here on tax.virginia.gov. So go ahead, get in there, get your hands dirty, and if you have any questions, call the state. If you still have questions, feel free to reach out to us, and I'd be happy to help get your business off the ground with the one-on-one counseling. Um, but yeah, that's pretty much it. Again, hopefully we can help you guys develop your industry specific client checklist. And I'll pass it back to Allie and we can get rolling on questions.
Thank you, Blake. That was a lot of very helpful and important information. First question is, excuse me, would you recommend that a business just starting out, pre-revenue, but expect to make about $10,000 this year total, to get a separate bank account and credit card to track business finances?
Um, I would say definitely, absolutely 100,000% recommend the business bank account. Uh, even if you don't have an LLC, just for cleanliness and tracking purposes, yeah, go ahead and set up that account. Um, it's much easier to do it up front than it is to once you start making the money to go in and switch all your subscriptions and stuff to another account. So yeah, go ahead and do that. As far as credit cards go, um, I doubt this early if you will be able to get a credit card solely under the business. Um, but definitely when you do that, make sure that it's separate from personal cards or at least have a dedicated credit card that you don't do anything personal with, right? So we just don't want to commingle. Um, that's a different conversation. Um, I hope that answers your question.
Thank you. Next question. Can internet-based goods or services, so like teaching a class, be subject to taxes?
No, no, that wouldn't be because that would fall more under a service. Um, I think that's more, and this isn't something I'm terribly versed in, but this is more of a product that you're downloading onto your computer that has licensure, um, that keeps it there on your computer. This isn't anything cloud-based. It's a pretty specific thing, but yeah, any service provided uh, over the internet is not subject to sales tax.
Okay. So, for example, if it's a subscription-based sale of software, that would be subject to sales tax?
No, that would not be subject to sales tax. Is it something that, is it a product that they're purchasing and then downloading it to the computer? Um,
Not clear in the question. This is actually a separate question, similar topic. But the
okay.
second question asker mentioned that it's a resale of COTS software products.
I think that would be a great meeting to have one-on-one. Would love to kind of help you research that and look specifically and see if we can figure that out for you.
Wonderful. So for the person who asked about the COTS software products and subscription-based sale software sales and taxes, please reach out to me and I can get you connected with Blake. My contact information is there in the chat for everyone to have, and I will drop it in again later. Alrighty. If a business is a consulting company, single member LLC, which new tax type should the business owner select to add to their VA tax self-service portal?
Could you give me the industry one more time? Did you say consulting?
Yes, consulting and registered as a single member LLC.
Okay. Um, so really, I don't know that you'll be subject to anything at this point through the state. If you're not selling products, if you plan to hire, wouldn't hurt to go ahead and go in there and get acquainted with it. But at this point, you probably don't have anything that the state's going to come knocking on your door about, as a single member LLC. So I'm assuming no employees. I think you're okay for now. If you plan on hiring, expanding, then I would go ahead and get established with the state.
Good to know. Similar question. As an entity type for an LLC, is a corporate entity or pass-through entity better?
So generally, um, upfront, pass through. When I think pass through, I think LLC is a disregarded entity. So even if you have an LLC, if you're a single member LLC, that is a legal election. as opposed to a tax election. So that's just disregarded for tax purposes. Okay. So LLC, fine, doesn't have any bearing on taxes. Um, if you set yourself up as a corporation from the get-go, probably a little bit of overkill, in my opinion. You can look at S corporation once you hit a certain level of revenue. Generally in Virginia, I say start talking about it once you get to around $100,000. Um, but yeah, I wouldn't mess with corporation, um, unless there's a lot of partners involved. Maybe you want to talk about corporation, but generally pass through to start is the way to go.
Got it. Um, if you are a solo LLC, do you have to pay state unemployment tax?
No, you do not. You don't have to worry about that until you have employees.
What about so sorry, just reading the next question that was asking the same question
I
for
got you.
owner operator with no employees. So no unemployment tax until you have employees.
Correct.
All right. If you are a new business owner, is there a best practice of how to declare yourself? For instance, should you give yourself a salary as a W-2 employee or should you claim yourself as self-employed?
So if you're a sole proprietor, even if and when I say sole proprietor, that doesn't exclude single member LLCs, okay? You can still be a sole proprietor and have an LLC because from tax perspective, that LLC is just disregarded, okay? Um, Allie, I just want to make sure that I'm understanding this correctly. Can you repeat that one more time? Sorry about
Yes.
that.
Um, Sorry, I'm looking for the question.
Sorry, I don't want to steer them in the wrong direction here.
No, you're good. It's asking about owner no. It's how do you claim yourself if you are a how do you, best practice for how to declare yourself if you should you give yourself a salary as a W-2 employee or claim yourself as self-employed?
Right. So I'll ask a follow-up question. I don't know if this is capable, if you're able to do this, Allie. I will ask them while I'm talking to confirm that they are either just an LLC or a sole proprietor. Because if that's the case, then you can't pay yourself a W-2 wage. Okay. Um, to run payroll for yourself, which means payroll taxes, things like that, you have to do it for yourself as the owner, you have to be an S corp or a corporation. Okay, so you can't do that. However, I would recommend that don't just take money out of the account when you see the bank balance looks good. Okay. You can kind of treat it like a salary and say, hey, I'm going to pay myself this much per week. That way that it fits into your budget. And once you are to the point that you would like to elevate your company to an S corporation or a corporation, you're already used to that frequency, and you're kind of going ahead and getting a leg up on an issue that a lot of business owners come up with. Um, they want to make better tax elections and become a corporation, but they don't want to give up those discretionary draws, right? So I would recommend definitely pay yourself kind of as if you were on a salary, but don't try to run W-2 for yourself unless you're set up as an S corp or a corporation.
Thank you. I'm not seeing a follow-up or response to your follow-up question on that, so we will move on.
Okay.
Um, what are safe ways to use AI to help with I'm guessing filing your taxes or preparing your taxes and unsafe ways to use AI for this process.
Um, I think, most of the time, if you're using a tax software, then, it depends on which way you're going first. Um, I would still recommend using a tax software. I don't think AI is a great tool to say, hey, I'm going to upload my documents to it and I'm going to just plug what it tells me to in. I would try to start with the tax software and use it as a review option. We do that a lot. I mean, most tax softwares will generate a summary that doesn't have any sensitive information on it. Okay. So get into something like Free Tax USA and print off the summary of your return and then start talking to Claude or whoever about it. And just make sure that, you know, it's, I haven't heard of any horror stories with AI as far as identity theft, but I don't recommend uploading socials and things like that to it. So definitely use it as a review tool and say, hey, based on what you're seeing here, does this look right? See if anything jumps out to Claude that's maybe not jumping out to you, but that's kind of the extent of it.
Thank you. Okay, so how do you recommend determining the quarterly estimated tax due, or do you have any tools that you would recommend folks can use to do that initial estimation?
Yeah, so generally it's the best way to look at it is 100% of prior year tax liability. Okay. So if you had tax liability at the end of the year last year, then split that into four and there you go. Now, I would still recommend if you're just, you know, blowing it out of the water in the current year, then yeah, go ahead and up those. But generally, the penalties and things related to estimated taxes are tied to the prior year tax liability. So just try to split that tax liability from prior year four ways. Certain tax softwares will actually generate you when your taxes are prepared. They will generate the estimated taxes for the following year, and that'll give you a frame of reference and it'll give you the numbers to so if you're looking at new tax software, maybe something to look into, ask them if they offer that because that can be helpful.
Thank you. Mm. What are the filing dates for state and federal taxes for LLCs, and what are the income threshold levels for being required to file quarterly?
So the LLC, I mean, again, assuming that there's no S corp election or corporation, um, they're going to be your LLC is going to be baked into your personal return. Okay. So it's going to be the same due dates, April 15th, um, for your LLC because your LLC, unless you've, morphed it into a corporation or something, it's still going to pass into your personal return. So there's not an actual separate return for your LLC. Um, so until you make that S corp election, your taxes are going to be due for the LLC at the same time as your personal taxes because they're going to be the same thing. Um, and then for the estimated taxes, it's really, again, it's generally the penalties are going to be applied based on the prior year tax liability. So if you're in your first year, there's really no requirement. Now, I would still recommend it because if you're making a lot of money, you don't want to be shocked at the end of the year. But I would say, if this is your first year in business, let's look at it at the end of the year and see what you owe. And then that will kind of become the basis of what you'll need to pay out in estimated taxes the next year.
Got it. Thank you. Moving on to the next question. Can you talk more about things that are included in tangible personal property? Understand office equipment, i.e., computers and printers, are part of this, but for example, if the question asker's business is music education and they have instruments and sound equipment, is this subject to tax? Or are there other examples that you can think of that are or are not included?
That's a great question. Um, I would say the way I look at it is not so much about what the item is, but how much is it worth? Um, if there's something in the course of your business that's physical and it's in your place of business, and you realistically think that you could go and sell it for $1,000, okay, you want to put that on there, okay. And I know that especially if you're in the music industry, um, you're probably dealing with a lot of used equipment. Um, it's going to be the same deal. You know, if you get a donation, something that's really not, you don't think you could really recover any funds for that, I wouldn't report it. But a nice desk, a nice new instrument, definitely if it's robust sound equipment, what you think you could recover from that, you can always default to the cost, right? And a lot of that's going to depend on the form specific to your locality, right? Um, but I would look more at value over substance to know what to put on there. So if you can think of the total value, they'll apply a little percentage. It's usually not substantial. Okay. So if it's got value, I'd go ahead and put it on there.
Thank you. Um, could you clarify a little bit more about what is considered professional services and therefore not subject to sales tax? I've got two different questions related to that topic, asking about like apps that someone creates or a graphic and web design business.
That's a really good question. Um, Generally, I would default. I've actually never worked with a web designer. Um, my thinking would be not subject to sales tax. I think that would be considered a service. Again, would love to explore that with you if you wanted to talk about it. Um,
Is there perhaps a resource that folks can look at to help dig into that for themselves before they start those conversations?
I would, I think probably the most surefire way to know is talk to the state. Um, of course you can Google it, but um, the state can pretty quickly put your mind at ease if you let them know what you're doing.
Got it. Thank you. All right. Um, if you pay yourself via withdrawals from your business to personal account on a regular basis as an LLC, is there any other documentation or justification that you need other than the transaction receipt and reason? I'm assuming this is when you're filing your taxes and accounting for those.
Right. That's a really good question and a big hurdle initially for a lot of business owners. So the way to look at this is that again, from a tax perspective, unless you're a corporation or an S corp, that LLC is basically nothing from a tax perspective. So um, you can realistically take money out whenever you want because you're still taxed on the performance of your business. So you're taxed on your revenues minus your expenses, regardless of whether you take the money out. So, you know, you paying yourself as just a sole proprietor or an LLC, single member LLC, there's no tax effect of that. You're just moving money. So you're taxed on your revenues minus your expenses, regardless of whether that money is sitting in a business account or your personal account.
Got it. At what point When offering services as an individual or sole proprietor, do you need to get a business license?
Pretty much, I mean, as soon as it becomes something that you want to continue, if you want to operate a business and you're making money, then yeah, there's probably a business license out there that you need to acquire at that point. So I would look at, is this something you want to keep doing? Go ahead and contact your city hall or your county office.
Got it. And I again have a couple questions that are more specific to their industry,
Okay.
specifically asking about sale of honey considered as part of a meal tax. Artist and paint commissions for clients is considering it a product or service. Um, so for those ones, I would highly encourage you to reach out to us via email. We can either try and answer those questions quite quickly, or if it needs a little bit of digging, we're happy to get you connected with the advising process, likely with Blake, potentially with one of our other advisors who also has experience in these areas.
The honey thing, highly doubt the honey is subject to meals tax. Highly doubt. Unless they're sitting in a restaurant just eating honey.
All right. Final question that I have a couple more questions coming in. But next question is, can you share a bit more about dealer discount and how it applies to value-added reseller or system integrator? Not sure if that's a more specific to industry one that you we should dig into separately.
Yeah. Yeah, I'm not, that's not quite clear to me.
All right. Um, for a home business, the question asker has been trying to find where they should pay the home-based tax. Do you know where they can find that information or have any resources that someone could get information about home-based tax at?
That doesn't ring a bell for me. Again, would be happy to look into it if we can. But that doesn't ring a bell for me.
Alrighty. So we Okay, so we have a follow-up on that dealer discount question. It
Okay.
was on one of your slides, there was a checkbox for dealer discount, hence the question on how it applies if they get a discount as a VAR or value-added reseller.
Yeah, that might be one that we need to. This is what he's talking about. Um, I really we generally don't see anything populate there. So I filled out a bunch of these. Never seen anything populate in that field. Okay. Again, would love to look into it further to understand this stuff a little bit deeper, but generally, um, not something I've dealt with personally.
Thank you. So question asker, please do just shoot us an email and we can help clarify this for you and dig into it a little bit more. We do have one question left in the queue, and I see that we're a little bit over time, so I think we will close out the Q&A there.
Okay.
Thank you everyone for all your questions. So final question is asking for clarification. If someone is a solo LLC, do they have to pay the 15% on your LLC income, or would it be taxed as a regular income tax?
Yeah, that's kind of that's the kicker with self-employment, right? Is you got to again, there are ways to relieve that self-employment tax burden, but that's only for S corporations. Okay. So if you're an LLC, single member LLC, you are subject to that 15.3% um, self-employment tax. Now, as there are benefits to being self-employed, right? Because you can write off your expenses, which a W-2 employee can't. So, um, depending on how on top of your business operations you are, that can generally help relieve a lot of those self-employment tax. But to answer your question, yeah, as a single member LLC, you are going your net income, the performance of your business is going to be subject to that full self-employment tax.
Alrighty. Thank you, Blake, for all of this excellent information. And to all of our participants, thank you so much for joining us today. We hope you found the information helpful. And if you have questions that come to your brain in the middle of the night that you're saying, "Oh, I wish I'd asked it in today's webinar," please shoot us an email, reach out to us through the website. There's a link to schedule an intake call with me. But yes, please don't hesitate to reach out to us. We love questions and we're happy to answer them. As I mentioned at the top of our session, I'll be sending out a recording of today's webinar as well as the slides in a follow-up email. So take a look or be on the lookout for that. I'll try and get it out within a week of today. Um, Additionally, we hope to see you all in our future and upcoming webinars. They'll be posted on our website, so please take a look and see if any topics interest you. I know we have had a couple questions today that were could be answered in some of those other webinars, specifically questions about how to register your business as far as LLC, S Corp, or partnership. We do have a webinar on that coming up on June 12th. So take a look at our website, sign up for additional webinars. We look forward to seeing you in those. Thank you, Blake, for chatting with us today. And with that, I'll close us out.
Thanks, Allie. Thanks, everybody.